Welcome to Blytheway Business News. Today we're joined by one of our favourite companies, Caledonia Mining Corporation. Caledonia operates the Blanket Gold Mine in Zimbabwe. Viewers may remember that a few weeks ago we were joined by Chief Executive Steve Curtis, who told us about the company's most recent dividend. Today we're joined by Mark Learmonth, Finance Director, who's going to give us an update on the company's first quarter financial and operational performance. Mark, welcome to Blytheway Business News. The news is out today. Quick overview, please. First of all, with the finances, how's Caledonia been performing?
Well, without any equivocation, it was an excellent quarter. Production, as we've already announced, was up about 20%. The realized gold price is up about 23%. So revenues were up nearly 50% in the first quarter compared to the first quarter of 2019. Gross profit was up 150%, up from $4.3 million in the first quarter of 2019 to over $10 million in the first quarter of this year. And our on-mine costs came down. Our on-mine costs came down from just over approximately $800 an ounce to about $680 an ounce. So in profit and revenue terms, it was an excellent quarter. It really all comes down to cash. Cash flows are very strong. Net cash flow from operating activities for the quarter increased from $6.3 million to nearly $11 million. So that's nearly $1 million a week. And over the course of the quarter, we added about $5 million to our cash position. So a very good quarter all around.
This is the quarter ending 31 March. Probably a bit early to detect any impact of COVID-19, but have you been affected at all so far by the COVID pandemic?
Yeah, well, you're quite right. The lockdown measures that were imposed in South Africa and Zimbabwe really only happened in the last day or two of the quarter, and so they had absolutely no effect at all. But we did go through a 3-week lockdown in South Africa and Zimbabwe in April, and we managed to maintain production. We used our quite considerable stocks of raw materials and consumables. We've isolated our workforce to keep them safe. And so during that 3-week lockdown period, we achieved 93% of our target production rate. We're already slightly ahead after the end of quarter one. So after that 3-week period at 93%, we're still pretty much even Stevens for the year. But then since then, in the intervening couple of weeks, we've now returned back to 100% production. So provided we can keep our workforce healthy, and we've gone to some quite considerable steps there to isolate them from the surrounding community, even though within the surrounding community there's very little in the way of infection. So keep the workforce healthy, maintain our supply chain from South Africa, and now we are managing to restock the mine with all the things we need. And then the third thing is maintaining access to market. We need the refineries to stay open. We need to get paid for the gold that we're producing and delivering. Provided all three of those conditions hold, we're producing at full rate.
Your announcement today says that the gold production is increasing or has been increased because of management initiatives which you took in 2019. Can you give us a couple of examples of the kind of things you did?
It actually goes back before that. If you cast your mind back, sort of 2018, 2019, we had some unfortunate safety incidents, and we then the chief operating officer then decided that it was a bit fruitless just sort of shouting at people and saying, "Do what I tell you, do what I tell you." And so we embarked on what we call the Nyansvi initiative, which is it's become a much more broadly based initiative whereby we take every employee from the mine is taken out of the mine, out of the work context, and goes through a week-long process whereby they co-build and co-design the safety measures, but also they've helped to co-design sort of a new incentive structure, which means that because they helped to co-design it, they buy into it. And so one of the things we've done is we've, in the middle of last year, we revamped the bonus structure of the mine, which means that teams that perform get much clearer, much shorter time frame. They get real benefits from their success, and that's a way to encourage teams that aren't performing quite so well to up their game. So we've changed the bonus structure. We've improved mining discipline. So we've stopped we've stopped the mining dilution that was affecting us last year in terms of lower realized grade, and we've increased people's understanding of what's expected of them in terms of each day what their target, not just rock production, but the gold in the rock, what their target production is. So all of those things have come through and have now made the workforce is now much more focused and has a much better understanding of what it is that we want them to do, what they want to do, and there's much more goal congruence. It takes a long time to change a culture. Mining cultures, and Zimbabwe is a very conservative environment, so it has taken several quarters for this to flow through, but it now seems to be working very well indeed. And it's all credit again to Dana Roots, the Chief Operating Officer, and to Caxton Mangezi, the mine manager.
Well, it's clearly working, so well done to them, because gold production, as we were saying, gold production's up. You're making greater profits. The gold price is in your favour, and you carry on with this wonderful track record of paying dividends. Caledonia is in a very strong cash position. You've also mentioned today that you may now look or continue to look at opportunities for acquisitions or growth within Zimbabwe. Can you give us a hint of what that might involve?
Yeah, we must have looked at 24 opportunities in Zimbabwe. Let's not forget that Zimbabwe, sort of 30 or 40 years ago, perhaps 40 years ago, was Africa's third biggest gold producer, behind South Africa and Ghana. And geologically, it's very conducive for it's a very prospective area for gold. It just hasn't been explored or commercialized over the last sort of several decades for obvious reasons. So we think it's a great jurisdiction. We've looked at probably 24 opportunities. Of those 24 opportunities, we've narrowed it down to perhaps 4 or 5 that we really like. None of these are large-scale producing operations, so we're not for a minute thinking of splashing out, many tens of millions of dollars to buy some asset that's been run into the ground and needs a huge amount of money to recapitalize and make it. So that's not our focus. Let's be clear about that. We're looking at brownfield properties where there has been work done, many decades ago. That work needs to be refreshed, it needs to be built upon. But typically we're looking at things where we will perhaps get our hands on the asset for $2, $3, $4 million over a course of a year or so, perhaps 2 years, spend another sort of couple of $1 million to drill and prove up a resource base, and then take it from there. So the idea very much is to redeploy some, but not all, of the cash that we're going to be generating from Blanket to build out a growth pipeline which will take us forwards for the next decades. But very clearly, we don't intend to blow all the money that's coming out of Blanket on a big high-risk acquisition in Zimbabwe. It's much more gradual, and so the idea will be to share the increased cash flows coming out of Blanket, some of it with shareholders and some of it for growth.
Well, finally, Mark, I see in your announcement today you've updated the market of something I think happened earlier on this year, which was you took Caledonia's ownership, and I should explain for the viewers that Caledonia owns the Blanket mine in partnership with some local entities within Zimbabwe. I think it was earlier on this year, you took your ownership up to 64%. Now, presumably that is just another vote of confidence in Zimbabwe and in the Blanket mine.
Yeah, it's a very low-risk acquisition for us to increase our stake in a mine that we understand very well, and we've been running and operating for 10 years. So yeah, what we did is we bought out a 15% shareholder who has a 15% stake in Blanket, and moved them up to a 6% shareholding in Caledonia, because we want to continue the relationship with them. They actually have made and continue to make a significant contribution to the business. That leaves, we've now got 64% of Blanket. That leaves the workers have got 10% of the mine. The community's got 10% of the mine, and the government has 16% of the mine. So we want to keep the workers and the community in at the mine level. We think it's very important that they have that participation for every conceivable reason. We are engaged with government to see if they're interested in selling their 16% stake to us. That would be a cash deal. We get nods and smiles and waves. It's very, very difficult for the Zimbabwe government to actually get down and engage on a transaction like that, simply I think because they've got limited bandwidth and internal capacity to consider. So if they want to come along and sell us that stake for a price we can agree, that would be great. Failing that, we're very happy to leave them in at the mine level And in the course of sort of as we go forwards and as their loan to us is paid down, we'll be paying them considerable amounts of money to, as a shareholder in Blanket Mine, which, gives you a seat at the table when it comes to having, again, goal congruence with the workers, the community, and the government in terms of making sure that Blanket continues to be the success that it is at the moment.
Thank you. That was Mark Learmonth, Financial Director of Caledonia Mining Corporation, updating us on the most recent production and profitability at Caledonia. As you know, Caledonia is one of those rare beasts on the AIM market in as it pays a regular dividend. Caledonia is listed on the AIM exchange with the ticker CMCL and also on the Toronto Stock Exchange with the symbol CAL. The market capitalization is currently around 115 million and the shares are trading at around £10 sterling. That's it from Blytheway Business News for today. Thank you for watching.